Should you be investing in overseas property? Well, in this video, I'm going to run through the basics and most importantly, how it works for taxes. Whether you're living in the UK or living overseas, I'm going to tell you everything you need to know. So before buying any property overseas, watch this video so you don't get caught short. Welcome back to the YouTube channel. So for those that are new here, my name's Josh Tharby. I'm a UK chartered tax advisor, currently based out in Dubai, and I help entrepreneurs, property investors, and everyone in between stay on the right side of HMRC whilst paying the least amount of tax at the right time. So in this video, we're talking all about property investing overseas. To keep things simple and probably what's of interest to most people, we're going to be talking about the UK side of things and the UAE, the Dubai side of things. Honestly, Dubai is still a massively hot topic. So I first went out to Dubai probably about 3 or 4 years ago now. I've been spending a lot of time being based out there since pretty much. And honestly, it's just gaining more and more traction in terms of people moving out to Dubai, property investing in Dubai. A lot of landlords in the UK are selling up, although the UK, in my view, does still represent great value when it comes to property investing. Of course, you've got home comforts. You know the UK market inside and out. So as a result, it's a bit harder to lose money compared to somewhere such as Dubai, which in the past has gone through massive cycles. There have been bubbles, although now the market's a lot more mature in the UAE. You've got tighter mortgage lending and things like that. So it's less likely to go through such cycles and have such volatility. And a lot of people often ask me, Josh, can I invest in Dubai? How is it taxed? Is it tax-free? What if I buy off plan and sell it? How does it work? Well, don't worry guys, because in this video I'm going to tell you absolutely everything you need to know. The first thing you want to consider is, where are you personally tax resident? There's a lot of people watching this are probably either based in the UK or based in the UAE, and it's important to know where you are actually based and where you are paying tax, because if you're based in the UK, the tax situation is pretty simple. If you purchase a property in the UAE, whether you purchase it to let out long term, to let out on Airbnb, or you purchase it in the anticipation of selling it in the future for capital growth, the tax situation is relatively straightforward in that you will be paying a lot of tax on that income in the UK, pretty much just as if you are owning any other UK-based property. So what that means is it gets lumped together with your other income. So if you've already got employment income, you're a 40% taxpayer. Well, actually, you'll be paying at least 40% tax on those rental profits. And Section 24, we all know what that is, the mortgage interest being restricted. That applies on overseas property income too. So generally, if you're a high earner especially, and you want to consider buying property in your own name, it's usually not a good decision from a tax perspective, whether that's UK property or overseas property. But if you were to purchase it something off plan, the good thing about Dubai is there's lots of fantastic opportunities. There's all this talk about decent capital appreciation, especially when you purchase something off plan. You have a 2 or 3 year payment plan. It gets built. You sell it on to the end user. You get a nice tidy profit. But actually, how is that taxed in the UK? And it's straightforward. You'll pay capital gains tax on that, just as if you would if it were a UK-based asset. So of course you've got your £3,000 CGT annual allowance, and then if it's in your basic rate band, taxed at 18%. Any gain that spills over into the higher rate band, that would be taxed at 24%. But Josh, every real estate agent I spoke to in Dubai told me that Dubai's got no taxes. I can invest in property tax-free, and you've just told me otherwise. Well, unfortunately, that's the truth of it. You only get property income tax-free if you're living in a country where there are no income taxes, such as the UAE, such as Dubai. That said, if you do have a large enough scale, we've got some clients where they've actually been able to structure it so they own property through a Dubai-based company. I just want to pause the video right here to quickly let you know about my completely free Tax Smart School community. All you got to do is click that link in the bio and you're going to get free access to tax saving strategies, tips, articles, videos, resources from me, and so much more. So if you want to start paying less in tax today, click that link below, sign up to the free school group, and I'll see you inside the Tax Smart Club. Back to the video. They're permanently based in the UK, but actually they abdicate all management responsibilities. They're not involved in that business at all, and they effectively hire people to run their property business. And then as a result of that, because there's no central management and control taking place in the UK, that's what it comes down to. I'm sure everybody who's seen my videos in the past, you know all about central management and control. Broadly, if you don't, that means if you're a UK-based taxpayer, UK resident, but you set up a company in Dubai, if HMRC can prove that you're actually running that company, you're managing that company from the UK, they will argue that that overseas company is actually a UK tax resident and they want corporation tax, just as if you'd set up a normal UK limited company. But if you've got enough capital where you can actually employ people and genuinely have no involvement in that overseas property company, then it is possible to set up a UAE-based company which does own the real estate, which can benefit from 375,000 dirham corporation tax threshold, and then even if profits are over that, just the 9% corporation tax rate. But like I said, you do need the right structure in place for that. But if you are looking at buying property in Dubai, how should you do it? Well, the first thing is, what are you going to be using that property for? So we've got a lot of clients where they actually are planning on moving out to Dubai. They've just purchased something off plan, but they're scared to do it in their own name. They don't know whether they should do it in a limited company or what the best approach is. And ultimately, it's the same. So if you're looking at living in a property, 99 times out of 100, it's always best to do it in your own name. As long as you're not going to rent it out, as long as you're not a higher rate taxpayer who is renting it out, if you're a basic rate taxpayer, it's not too bad renting a property out in your own name, but certainly as a higher or an additional rate taxpayer, the tax rates become exorbitant. You're looking at upwards of 50% by the time you factor in the tax restrictions on the mortgage interest costs. 50% on your rental income, it doesn't make sense. But if you are purchasing a property off plan in Dubai, which is going to be completed in 2 or 3 years' time, it makes sense to buy that in your own name. The question we get from clients is, oh, well, I need to get the money from my limited company, so shall I set up another limited company or can I loan it to a company in Dubai? I mean, yes, you can do that, but no, you probably shouldn't, because then what you've got is an asset which you might be living in, which is owned by a UK company, which is difficult, or you've got the money being loaned to a Dubai company, which you're going to be living in, which again isn't the best solution. So usually in those cases, we say to clients, well, actually, you should probably borrow the money from your company or try to meet it from savings if you can. At least if you borrow the money from your limited company, you get a very low interest rate. I think it's 3.75% you've got to charge on that to avoid the taxable benefit in kind. Of course, when the loan's outstanding 9 months after your company's year end, you've got the Section 455 overdrawn director's loan account tax. But again, the company pays that. You've not got to pay that tax personally. And when the loan is made good, such as when you actually do move to Dubai, you declare a dividend to repay your director's loan account, the company does get that cash back. So it's not a permanent tax charge, it's only temporary, which is why in most cases it's best to structure it by taking the money out personally, having it as a loan and buying that property in your own name, so you've got a nice, clean, easy, tax efficient structure for you to continue on moving forward. But what are my thoughts on property investing in Dubai compared to the UK? This is a question I probably get asked at least 5 times a day, whether on Instagram or actually when we meet up with people. And really it's a tough question to answer because of course they are so different. The UK is an established market. You have slow, steady, well at the moment probably no capital growth in a lot of places. The UK, the economic outlook is depressing, but you've got steady rents. You know that in the long term, rents will probably keep increasing, property prices will keep increasing. You can do a BRR, forced capital appreciation. But in Dubai, because it's still a relatively new economy, instead of Dubai 2.0, of course Dubai, the nation's been around for 50 or so years, but actually the whole Dubai that we know today is still new, it's still growing, they still want to continue growing the population. So of course it is more risky than the UK. But that said, where there is risk, you do get reward. In Dubai, post-COVID, you had some areas that had literally doubled in the space of a couple of months, which of course means that they can then fall again. But with Dubai and what I know in terms of the sheer number of people moving there, the sheer amount of money going there, the clients that we work with that are worth 10, 20, 30 million that are literally exiting the UK, many of them disposing of all of their UK property assets to go to Dubai, well actually there is a good factor for property prices in Dubai continuing to keep growing. As long as you buy right, you buy somewhere that's maybe mature if you want a good rental yield, or somewhere where it's up and coming if you want the capital appreciation. Of course, do your own due diligence, do your own research. But for me, I was always against the idea of purchasing property in Dubai, but now just honestly seeing the demise of the UK, Labour getting in, the rent reform, all the EPC, the sheer amount of paperwork you have to go for, I am coming around to the idea of potentially investing in Dubai, because at least there, if a tenant doesn't pay your rent, you can do things like get them a travel ban. You can't leave the country until the rent's paid. And even in some cases, you actually can get the tenant to pay a year's rent up front. You could never do anything like that in the UK. You can get decent deposits. So actually, you do have a lot more rights, so to speak, in the UAE, and you can certainly get a better outcome. Imagine your tenant paying your year's rent up front. That would be perfect. but in the UK you can't do that. And of course, the big one, when you're living in Dubai and investing in Dubai, is tax-free. So if you're a high earner who's in the UK and you've got a portfolio of 10 properties giving you £50,000 a year rental income, well, actually you're only going to see 25k of that, because you've got to pay your taxes, the mortgage interest being restricted. Probably about £25,000 is what you're going to walk away with. But if you're in Dubai, that same capital, that same rental yield, same everything else, you're going to keep the full 50,000. So in that case, it really does show that investing in Dubai, when you do it right, when you are tax resident there, gives you a much better return than invested in the UK. And then of course, when we add to that as well, when you actually come to sell the properties in Dubai, there's no capital gains tax, or if you want to pass them on to your children, no inheritance tax. In the UK, we've got capital gains tax of currently 24%. There are rumours about it being changed. We've got inheritance tax at 40%, which hits most people that are property investors. And there are even talks about changing this further, restricting this. So you can really see why a lot of people are investing in Dubai. A lot of people are relocating to Dubai, because the taxes mean you can actually make your money work a lot harder for you, or get a much better return with less money, because you're not paying hand over fist in taxes. So there we have it, guys. Investing in UK property as a UK tax resident. I'm sorry to be the bearer of bad news, but it's still fully taxable in the UK. So make sure you do declare this to HMRC. That's a good way to end this video. Actually, a lot of people say, Josh, what if I just don't tell them about it? Well, actually, that you should never ever do that. That is tax evasion when HMRC find out. I won't say if, because it is a case of when. All of these tax authorities, they share information. They've got AI supercomputers. They say, oh, I've got a UK resident, owns this property here. They all talk to each other. So HMRC will find out at some point in the future, and the penalties will be significant. So do make sure that if you do own property in Dubai, you are declaring it in the UK, whether that's rental income, whether that's capital gains, and pay the tax in the UK, because it's just not worth taking that risk. Or if you want to do it tax efficiently, own property in Dubai, live in Dubai or somewhere else where there's low taxes to keep the most of your money. Let me know, guys, did you find this video useful? What do you think about investing in Dubai, taxes, the UK? I'd love to hear from you guys in the comments. Anything else you want to see in this channel, do let me know. Otherwise, that's all for now, and see you next week.